My name is Paul Bear. Welcome back into Tech Path. Let's get into it today. I do want to thank our sponsor, and that is Coinbase. This is a great place to get started in crypto, and you can do this as a business or an individual. Super easy to set up, and guess what? All you have to do is use our code, and you can get up to $200 in crypto to get started. So start your journey in crypto right over there on Coinbase.com. Use our link down there. All right, let's get into it today. Let's go with a couple of things. Obviously, crypto liquidations hitting 700 million being liquidated out of the market in the last 24. Bitcoin dropped below 96,000 right now. I think it's right now as we record this trading around 94. So the key is why are we continuing to see these kinds of presses on the 100K zone and then reversals? Everybody's been looking at, once we hit that 100K number, is it really hammered down up to the next level? And I think a lot of this has to do with much of the macro news is starting to paint out. Some of the macro news is, of course, being driven by NVIDIA. NVIDIA dropped one of their biggest projects ever, and that was called Digits. This is a personal AI supercomputer. Look at the size of that thing. That's a desktop monitor, by the way, that's sitting next to it, and a keyboard. This is the kind of supercomputer that we're going to be using for AI craftsmanship in the future. Most likely, we're going to see a complete shift in computing. The interesting thing was that NVIDIA did not respond all that well as it spiked to an all-time high and immediately retraced back down to where it's trading right now at about 140 bucks. So I think the real question is what is pushing the market into this? These are all bullish signals coming from the biggest stock within the S&P, the most valued company. And then you look at all of the factors that are more from a macro side of things that would make you think that this is ready to go into the next zone of market go up. When you look at Fed rate cuts over the years, and this chart is a little bit scary when you compare this to 10-year yields before and after the first Fed rate cut. And I want to kind of, on this chart, show you guys something. So you'll notice here on the agenda, September 24 is that red right there, okay? That's the line we are on right now. So you'll notice that we deviated right here from when the rate cuts started to happen. And instead of trending down like we've seen in past scenarios, past recessions, past financial and economic challenges, this is not necessarily the case. The only other one that seeps out similar to this is going to go back to the year 2000. And everybody knows what happened in the dot-bomb era. We had 17 trillion that came out of the market when dot-bomb started to occur. So are we in that phase of an overbought S&P 500? What kind of impact is this going to have on the rest of the market? Other things that you got to consider is the Fed watch right now. Everybody's looking at the next FOMC meetings 20 days away. And you consider this right now, at this point, it looks like it's about a 95% chance that we're going to get zero of a rate cut. We are going to go flat. I would agree with that. I kind of thought it was going to happen last month in December. I was surprised that Chair Powell came out with a quarter. I understand that that was the situation that they had kind of grafted into their plan overall. But it was perfect to not do it. And I think that's the challenge that the market's now hitting for sure. And of course, I think the question is how does this play out for the rest of the year? Because the rest of the year, I think we are also going to see maybe, even though Powell has already said he's going to have less rate cuts than what was initially going in. But Fed funds futures are now pricing in 95% no change January, March, a 61% no change, and then a maybe in May. So the 7th of May could be the first rate adjustment that we could see this year. Now, if you time that with where the market goes in crypto, that may not necessarily be good for crypto in general outside of some of the narratives that are starting to play out within crypto right now. Now, there's a couple of clips I want to go to. This first one is going to get into the inflation problem that everybody's looking at, of why it's so sticky, etc. Let's play that clip.
We don't have an inflation problem. We have an inflation issue relative to a 2% target. You heard previously this notion of sticky inflation, sticky inflation, sticky inflation. Mm-hmm. That's actually stable inflation that doesn't disrupt the underlying economy in any fundamental way.
Are you arguing for them to cut rates even as inflation is hotter than they'd been hoping for?
So my worry is the opposite, is if they really believe in 2% inflation, mm-hmm. they would hike rates.
Okay, so this is an argument against them hiking
Correct.
rates.
So if they really believed it, what I think we're going to hear is, yes, we are aiming for 2% inflation, but down the road, mm-hmm.
down
the road. And we're going to tolerate, we may get one cut this year, but we should not want them to be dead set on 2%, because if they're dead set on 2%,
then rates are going up.
The rates are going up.
Do you think they'll raise rates this year?
No, I don't.
Yeah. What would happen in the markets if either there were no cuts or if they actually raised cuts or raised hikes?
I think we can live with no cuts. I think we've adjusted dramatically. From a year ago, we were expecting 6 to 8 cuts. Now we're expecting 1 to 2. We've pushed the one the market has all the way back to July. And this economy remains robust.
You got to love this. I mean, it's so amazing to me that the financial infrastructure of our media out there, it's not pointing fingers at anybody saying, how can you not really understand what's going on in the market? When you look at the percentage, and I've had several analysts on over the past 2 years, as we started to see inflation continue, I was probably one of those that was a little bit more bearish on the side that it was going to be sticky. We weren't going to get past it until we started to see a change out there within the United States, and especially around money printing. And that really is the bigger factor here. He said a couple of things on there. I agree with 3%. I think that should be the new baseline. I do agree that I don't think we're going to see any rate increases. If we did, that would definitely mean a market meltdown. But I do think that we may see fewer cuts in 25 than even the ones that Chair Powell has been alluding to. So all of that plays into this clip, and that is why 2% versus 3%. Take a look.
The difference between 2% and 3% compounded for the dollar is devastating. And I don't know, for you to just blow it off is a little weird. I mean, there's a reason they want 2%. That's 50% higher than 2%.
Do you know where 2% comes from?
No,
but 2%
3%, it would be, would make all of us feel awful in 10 years.
2% comes from the Bank of New Zealand in the early 90s.
It seems like a good number to me.
But it's an arbitrary number. What you've got to take into...
Well, 5 is an arbitrary number. If you want to deflate 36 trillion, let's go to 10 then.
I don't want to pull the rug from under U.S. economic exceptionalism. I think we are outpacing the rest of the world.
We're starting to at 3%.
I think we are investing in the economies of tomorrow, in the growth drivers of tomorrow. If we not
government?
No, the private sector, everything else. If you push this economy into recession...
The private sector is not what causes the inflation.
Joe, if you push this economy into recession, you will not just lose current standard of living, you will lose future standard of living. We are in a very good position.
3% loses the future standard of living. That's the problem.
2.5 to 3 is what I said. You went immediately to 3.
Well, if you say 3 at the high end,
and as long as inflation,
okay with it.
As long as inflation expectations are stable, you can navigate.
You better buy some Bitcoin, Mohammed.
He did.
Protect against.
He did back in the day.
Not enough.
Not enough.
None of us did. Damn.
All right, so you see the thing, the fight between this 2-3%, and I do agree with Mohammed to a certain extent, is that it is an arbitrary number. The big thing that he said there that I think is the one that maybe some of the analysts missed is it's the timing. Right now we're talking about the evolutional shift in technology, culture, and demographics in most of the G7, G20 countries globally. The likelihood of who is going to be the next Silicon Valley is all hinged upon how the markets do. So if we continue to push too hard and we push the U.S. economy into recession, he is exactly right. You're going to thwart innovation, you're going to thwart investment, and that will slow down the United States in terms of GDP going into the global market. And I think that's where a lot of the Asian countries and a lot of the European countries could possibly make a play here. So that's the big factor going out into where all of this is pointing to. Major victory, though, for crypto industry. Judge is halting the SEC's lawsuit against Coinbase. This still shows very well on the future of crypto. And I think that's the thing that we have to pay attention to, is that we're dealing with an administration that's coming in right now that is very, very pro crypto. And I think this is going to be the key because they see it as an innovation cycle that is one of the technologies that is going to help the country start to grow and get more positive GDP. So Coinbase has been granted permission to pursue a rare interlocutory appeal while pausing the rest of the case. So it's a big victory for that. At the heart of the case, certain transactions involving crypto assets qualified as investment contracts. That's kind of the scenario if you guys are brand new to crypto and don't understand why Coinbase was being sued by the SEC. But also, it's an immediate appeal that would materially advance the termination of the litigation. That is huge. So if this does go through and the appeal takes place and we see it litigated and the judge on the other side of an administration that is very pro-crypto, it could completely shift the cycle of how this goes. And I think that's when we get these cases getting dropped out of the SEC. And just remember, SEC is in a completely different place than it was back not too long ago. So of course, Paul Graywell there from Coinbase taking a little bit of a breather right now. So that's good for crypto in general. Other things that are playing into this was Jeremy Hogan talking about this, and this is in reference to the XRP case. He also stated here that this is also the main point of contention in the Ripple case. This is in reference to what was happening in the Coinbase case. So again, very positive for XRP, very positive for Ripple. All of this leaning into crypto as a whole. That being said, you got to look at what's happening over at Mar-a-Lago. There was President Trump and, of course, Stuart Alderati and Brad Garlinghouse. Very interesting, bedfellows. We're starting to see some movement, I think, within crypto finally making its way into DC in a much anticipated boom. And the real question is what does this mean for the markets going forward? The other thing that's going to be looking at is stablecoins. And of course, with stablecoins, you've got to look at RLUSD, which they've just listed Ripple USD on Ethereum. That's a big deal. So that's coming in very quickly. So imagine when we see RLUSD available in your Coinbase account or on your major accounts like Gemini, Kraken, many other others that I think we'll see, along with possibly even trading pairs, which I think is a big factor. I want to go to this clip because this is Monica Long, the president over at Ripple, talking about when we might see that. Take a look.
Right now, this is available on Bitso, MoonPay, CoinMina, additional listings coming on Bullish, Mercado Bitcoin, and others. What about a huge platform like Coinbase and others, for example? When does that happen?
We are continuing to expand distribution and availability of Ripple dollars on other exchanges. So I think you can expect to see more availability, more announcements coming soon.
How soon?
Imminently.
All right, imminently. I like that word. She's doing it. She's getting out there doing a media tour. That usually means a precursor to something big that gets dropped. So you're trying to get attention on Ripple. I think she's done a good job. She also goes further in the conversation to talk about the XRP ETF. Take a look.
A lot of questions around whether you could see an ETF tied to spot XRP. What kind of discussions are you having with people about this? Do you think we'll see one soon?
I think we will see one very soon. I think that we will see more, various crypto spot ETFs this year coming out of the U.S. And I think XRP is likely to be next in line after Bitcoin and ETH. There's already been a number of different companies like Canary and others who have filed. And so we think, especially with the administration change, and that the approvals of those filings will accelerate.
You've heard that from us quite a bit here on this channel. We believe that XRP will be the next ETF. I think that, along with Solana, are the two that are really kind of neck and neck. If you look at some of the things that are happening with Solana, here's one from Andrew Kang. He's talking about the 2025 Sol ETF trade. Well, you got to look at a couple of things. One, Sol has retraced most of the post-Trump election pump that we saw in November. Almost a given Sol ETF approved for this year. I think if not in Q1, yeah, okay, it could be in January to March. I feel like it could be early. And then no grayscale overhang like you had with ETH, so I agree with that. And then also Solana valued relatively cheap compared to its network usage. I don't know, it's still a $200 token. I think, yes, that is a good value based on the fact that we've seen Solana hit 260 this year, or last year, early last year. The opportunity is there for definitely seeing a nice, significant move on Solana. So if you haven't been in Solana very long or at all, maybe this is the time to do it. Solana surpassed other chains in yearly NFT adoption. So dominance was 38%, 1.6 million users, another big win for Solana. Also, they're outpacing ETH and Base in combined 24-hour DEX trading volume. So that's something that continues to see, because that opens up the opportunity in the DeFi space. That's more of a global phenomenon that I think affects the price of these tokens as well. And remember, we haven't really heard a lot about AI agents within Solana. Well, here, of course, was talking about where AI agents might be coming, and Solana retweeted this, or actually responded to it, and said agentic apps season seems to be here. So maybe they've got something brewing. With that, you've got a couple of things that you got to look at. One, of course, is Solana Agent Kit. This is their new AI agent protocol. And this is most likely going to set it up for Solana to start to see a big move on this. Remember, we've shown this before, is that there's a lot of AI agents right now, mostly on Base, obviously because of Virtual's protocol, but then you've got Avalanche playing into this. Now, could Solana start to make a pole position run with AI agents? Because it seems as though most of these platforms are moving very, very quickly. Solana could be right there in the middle of it. Solana Mobile's new phone, Solana Seeker, we've talked about this one quite a bit. It's going to enable users to generate tokenized AI agents on the platform of the mobile device. That, I think, will be a huge move that could break out into maybe something that could reshift the mobile platforms out there. And what I mean by not necessarily platforms, the landscape, and what that might look like for mobile computing, but even more so mobile use in the coming years. A couple of projects that we're watching very closely on this. This one, of course, is ALI, which is artificial liquid intelligence. And you can kind of see this is on the year versus, or the all-time versus the price. You can kind of take a look at the market cap kind of floating in and out. This one may be on the move as well. A couple of key factors there. Other ones that we're watching right now is Syncoin. They're also somehow related to the agent kit. This was another one that could play into this right now, a $31.7 million market cap. So not a big token out there. Volume holding at around 7 million on the 24. So something to consider if you're looking at AI agents as one of the angles to look at a strategy going into the rest of this bull market. And I think the real factor going forward, guys, is how does the quantitative easing match up with what's happening within the macro scenarios that are going to be facing us, both in interest effect on new business and the inflation. So inflation, of course, is possibly going to slow down the economy, and I think that's the factor we got to keep a very close eye on for sure as we get into the first quarter of 2025. All right, if you guys are not part of the Diamond Circle, get in on that. It's a very easy thing to do. Click the link down below. It's super simple. And of course, follow me out there on X at Paul Barron. We'll catch you next time right here on TechPath.